Today, Bitcoin falls after the latest read on inflation shows prices climbed in June. Crypto asset management giant Grayscale confidentially files to go public. And Coinbase's chief legal officer Paul Grewal breaks down what's on the table for crypto companies as Crypto Week on Capitol Hill is underway. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies are mixed this morning just as we got a fresh read on inflation. Consumer prices rose in June as President Trump's tariffs began to slowly work their way through the U.S. economy, with the inflation rate reaching 2.7% in the past 12 months. That's in line with Dow Jones estimates. By noon Eastern, Bitcoin slid to $116,000, but Ether managed to rise to $3,038. Meanwhile, XRP fell to $2.89. Okay, let's talk about the top stories. Standard Chartered is launching digital asset products for institutional clients. Today, the British banking giant announced that it's launching a digital asset trading service that allows spot trading of Bitcoin and Ether for institutions. The new product offering comes after Standard Chartered launched a digital asset custody service through the United Arab Emirates last year. Next, crypto asset manager Grayscale wants to list on a U.S. stock exchange. The company announced yesterday that it confidentially submitted an S-1 with the SEC. Grayscale said that the number of shares and the price range have not yet been determined, but the registration will take place after the regulator reviews the proposal. Grayscale's Bitcoin Trust helped usher in a wave of Bitcoin ETFs that launched on U.S. markets in January of 2024. GBTC now sits at $22 billion in assets under management, and Grayscale's gone on to launch other spot crypto products like the Ethereum Trust. Finally, as the House of Representatives debates 3 digital asset bills as part of the lower chamber's self-proclaimed Crypto Week, White House AI and crypto czar David Sacks came on CNBC this morning to discuss the rise of stablecoins in the mainstream. Sacks said more companies could be encouraged to use blockchain technology if the Genius Act passes.
I think that by explicitly authorizing the issuance and adoption of stablecoins, we're going to see an expansion in their use, and a lot of companies that didn't feel comfortable adopting them, like the banking system, like Visa, like MasterCard, are now going to feel much more comfortable because they know that they have a legal framework that has been officially approved and signed into law.
And we got breaking news just this afternoon, the House failing to clear a procedural hurdle to move those crypto bills forward. 13 Republicans voted with Democrats to block the motion, dealing a major blow to the industry, which hoped for a series of legislative wins this week. Lawmakers now have to figure out next steps for these bills. You can head over to CNBC.com for the very latest on this development. All right, focusing on Crypto Week on Capitol Hill for our main story. Before the House failed to clear that procedural vote, I spoke with Paul Grewal, chief legal officer with Coinbase, about his hopes for crypto legislation and what will change for the crypto exchange if these bills become law in the U.S. It's a huge week for digital assets in D.C. as Crypto Week kicked off yesterday. 3 major crypto-related bills are on the table: the Clarity Act, the Genius Act stablecoin regulation bill, and the Anti-CBDC Surveillance State Act. What are you hoping is accomplished in D.C. this week, and are you confident we'll see some of these bills move closer to becoming law here in the U.S.?
Well, we're hoping to see progress continue on major legislation that for the first time will bring clarity to crypto and clarity to the law governing crypto for millions of Americans who clearly have made their voices heard and expressed their wishes in ways that we think Congress is responding to. I am confident that we're going to see progress in the House this week on each of the 3 bills that you mentioned. The Genius Act, the act that is focused on stablecoins, has already passed the Senate. And so with the House lending its support, we think this will be ready for signature by the president in short order. But it's also critically important that we make progress on the Clarity Market Structure Bill. That is the bill that would finally provide a market framework for these digital assets and clarify what regulators have what authority over these assets at what time. So we think that between the 2 bills, together with the anti-CBDC bill, we're going to see the House lend its support to sensible crypto rules in the United States, and we think that's critically important for America's competitiveness.
So I know the biggest legislative priority for Coinbase is that market structure package called the Clarity Act, which sets the rules for when an asset is considered a security overseen by the SEC versus when it's considered a commodity overseen by the CFTC. In fact, the crypto exchange launched a 6-figure campaign last week urging Congress to pass that piece of legislation in an effort to get clear rules for crypto. Can you talk to me about this new campaign, and why do you think the Clarity Act should be the main focus right now?
Well, the campaign was very much in line with advocacy that we've engaged in for many months now. In fact, going back several years, we've said it's long overdue that the United States have a digital asset framework that defines for the first time which asset transactions fall to the jurisdiction of the Securities Exchange Commission. That confirms, for example, that the CFTC, the Commodity Futures Trading Commission, have authority over spot transactions involving digital commodities, and resolve this jurisdictional fight that has unfortunately distracted us in the United States and taken our eye off the ball. We feel very strongly that while the Genius stablecoin bill will be an important marker of progress, without clarity, without a market structure within which to put that stablecoin legislation, the work will be incomplete. But the good news is we think the Congress is hearing us loud and clear, and that on a bipartisan basis, we're going to see both pieces of legislation pass.
So as you mentioned, the Genius Act already passed the Senate last month and looks to become the first standalone crypto measure signed into law. What will change for the industry and for Coinbase if the stablecoin regulation bill does in fact become law here in the U.S.?
Well, I think what you're going to see is, for the very first time, U.S. law recognize that stablecoins are indeed an important element of our financial future and financial system. Millions and millions of Americans have made it clear they want to have choice in the financial system that stablecoins in particular offer. This is critical infrastructure for payments that people make, not only within the United States, but across borders all over the world. And that recognition by U.S. law is critically important for confidence in this market and for major institutions to have the confidence to know that they can make investments in this technology and know that it will be recognized by U.S. law.
So some of these crypto-related bills could be held up as Democrats have concerns about President Trump's growing crypto empire. In fact, some House Democrats have chosen their own nickname for this week, calling it Anti-Crypto Corruption Week. House Financial Services Committee ranking member Maxine Waters and other committee Democrats are calling on lawmakers to vote no on the Clarity and Genius Acts, which they claim give the president the green light to continue crypto dealings in his name. What do you think this all means for those crypto-related bills the House is set to vote on this week?
Well, I think it's unfortunate that those who profess to have concerns about this technology and claim to want to protect consumers and investors are resisting rules that would strengthen protections for consumers, strengthen protections for investors in ways that we think are long overdue. The fact of the matter is that while there is a certain minority of legislators who have expressed hostility to these bills, many Democrats are going to join the vast majority of Republicans in supporting this legislation. And we think that speaks to, I think, where the balance of the debate really now lies in the Congress. I also think it's quite telling that even as certain Democrats on the committee have expressed hostility to the proposed legislation, we understand that House Democratic leadership is not whipping actively against the bill, and each individual congressperson will be able to vote their own conscience and vote for what they believe is sensible policy.
The president said he wants to sign stablecoin legislation by Congress's August recess, and administration officials indicated a desire to see a market structure bill sent to his desk in that same time frame. Do you see that happening now? Is that even realistic?
Well, I think it is realistic. The president has been very clear that when it comes to the market structure bill, he would like to have a bill ready for signature no later than September 30th. And while it's true that there is a fair amount of work that still needs to be done in the Senate, we are encouraged that a significant number of Democrats are joining Republicans in committing to work through whatever concerns and issues remain regarding the Clarity market structure bill and get to a final vote and a final approval by that deadline. I think it's critically important that whether you love crypto or whether you hate crypto, you acknowledge, and I think we see policymakers acknowledging this, that rules for crypto are the way to address any concerns. And so we think that's what's going to happen in the Senate, as we believe it will happen in the House as early as tomorrow.
Today, Fairshake, a political action committee focused on the crypto industry, announced that as of June 30th, it has $141 million cash on hand. That includes an additional $25 million contribution from Coinbase. The crypto exchange is Fairshake's biggest donor, contributing a total of nearly $100 million to date. Why was it important for Coinbase to donate an additional $25 million, specifically now ahead of the upcoming midterm elections?
Well, our support for Fairshake is a reflection of our support for enacting sensible rules for crypto on a bipartisan basis. The fact of the matter is that when we first engaged in that process last year, we made it very clear that we were not simply looking to lend support for one election cycle or for one set of candidates, that we would be engaged in a sustained long-term commitment to electing pro-crypto members of Congress who understand that whether you have these concerns or whether you're more optimistic about the technology, you need to have legislation in place in order for there to be durable solutions. And so, for Coinbase, Fairshake has been an important way for those views to be reinforced, and we're quite delighted and frankly quite proud of our support for its work and for the work that it's done to elect those types of candidates.
Grewal also discusses what other crypto-related legislative priorities the industry has beyond market structure and stablecoin regulation. You'll be able to check out our full conversation over at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.